Hello.
Hello, everybody.
Hello.
How are you today?
I'm good.
We're good.
Tired.
Yeah.
I'm parking. Huh?
Tired, but good.
Yeah.
I hear ya. So today we're talking about auto loans. Such an odd topic, right? Can a car loan actually stop you from buying a home right now? Yes.
Yes.
Are you hearing that a lot in pre-approvals?
No, I mean, not that I haven't in the past, but I've had a lot where it's, sometimes it's like you have to pay off this auto loan or
Yeah.
pay off this credit card,
And
in
that's
order to get the loan. But
And before we get into it, a lot of people don't know that either. So for lenders, if you're not leasing a car and you have an auto loan that's on an installment loan, if that balance is 10 months or less, we can typically omit it from qualifying for a home. So it's a really good piece of advice. But yes, we are seeing people they're not getting pre-approved because of their auto loan. I don't know why, but we're seeing it a lot lately where people are choosing a high auto loan payment over housing expenses. And then they're trying to go and get pre-approved to purchase a house after they buy that car. So
right. And some of these auto loans, like you said, high, they're crazy.
Yeah, the interest rate alone. I mean, many of these payments are coming in close to what a mortgage payment would be. It's frightening that people are making that decision, but we just need to flip the script and educate people that you can have both, but you need to do it in the proper procession. Sit down with a loan officer. We always tell you to sit down with a loan officer and get your map to homeownership. They're going to be able to tell you how much of a monthly car payment you can afford and still buy a home. Because if you do it the other way around, you could potentially be knocking $100,000 plus off of a sales price that you could have purchased a home for. And that ruins your chances because
and maybe you are in a situation where you have to get a car right now, but then maybe you do something different. If you've talked to your lender and you get something that is more affordable. Maybe it's not as nice as you would want, but it's just temporary. And then you get the house, and then because it's very easy, even if you have a mortgage, to get an auto loan, they're much easier to get. So do it in the reverse. Get the house first and then get the car.
100%. Because the lenders, to qualify you for a mortgage, they're looking at your credit scores. They're looking at your employment and your income and your assets, all of that to qualify you. So I love that you pointed that out, to do it after the fact and do it more comfortably. Buy a used car. You don't necessarily have to go to the dealership. Find a great deal through somebody friends and family. Look online, Facebook Marketplace.
And like you said, all the things that you're looking for to qualify someone for a mortgage, like when you get an auto loan, they're not looking at any of that. They're running your credit. They're basically just taking a snapshot of your credit and seeing, what the risk is with giving you this loan. They're not really looking at your debt to income ratios and making sure that can fit into your budget. They're not doing any of that. So, do it later, but also, make sure you can afford it, because sometimes, you go to the dealership and you're just kind of wowed with like the newness of getting a new car, and you don't want to take that step down. I think in anything, it's hard for people to, take a step down. If you have something nice, you want something equally as nice or nicer, when in reality, maybe your situation only can afford something, maybe under that. So, take a good look, make sure you're not getting over your head, because the last thing you want to do is have that car repossessed or foreclose on your home, because you can't.
Yeah, because I think the shine of the payment wears off in 6 months easily when you're paying that high of a car payment. And keep in mind, when you go to the dealership, they are typically, if you're obtaining a financing from the dealership, they will pull your credit from multiple finance companies behind the scenes. So they each act as an inquiry, and it could drop your score significantly just from car shopping. So be careful with that.
Yeah. Be careful anything you're buying. So I remember when I first got in the business, a lender would always say, like, don't even loan your best friend money for a candy bar. Like, and some people really are that tight with their ratios. So don't be borrowing money. Don't go get, even if it's zero interest, I think some people get confused, like, but it's zero interest. So, who cares that I took out opened this new line of credit? I'm not going to buy anything until after I get the house. So it's just sitting here. That will affect your credit. So even if you don't plan on using it, and we see this a lot when like furniture stores, Menards, Home Depot, Lowe's, they come out with like 0% interest for 18 months if you sign up by November 1st and your closing is November 15th. You could really hurt yourself if you're going to apply for some of these lines of credit. So I think people get confused with like, it's the line of credit that's affecting you. Yes, if you max it out, that affects you as well. But if you're getting the line of credit and putting nothing on it, it still is negatively affecting that score because it's debt that is the potential for you to spend.
Correct.
And incur. So
most first-time home buyers don't realize also, again, you have the best opportunity out there as a first-time home buyer to either buy a 2 to 4 unit property with very little money out of pocket, where you would change your housing expenses dramatically, right? You can rent the other units out, you live there, so now your housing expense is very low, and that would help you pay for your car payment. And for some people, if it's just not for you to buy a 2 to 4 unit, a lot of first-time buyers are younger, so they could say, I'm just going to rent with 2 friends. We're going to be roommates. You can do that with a single-family home. Be smarter and wiser about your money choices because you will benefit from it. You can buy a single-family house and have 2 of your friends live there and charge them rent. You would be doing that if you were renting anyways. The goal is always to pay that mortgage down, gain appreciation over these years, and make your monthly housing expenses or anything else as affordable as possible.
Right. Well, I think that answers that age-old question. So again, I think it also always, every time we talk, I feel like it circles back to connecting with the right people and getting that roadmap set in place so that you know what's going on. Whether it's 30 days from now, 3 months from now, 6 months from now, a year, 2 years, 5 years from now, it's, you're going to be better off when you have a plan. I know I'm better at saving, putting money aside, paying things off when I have a plan to do so. So you don't have to be just willy-nilly about it when you have people that are willing to talk to you. And again, there's never any judgment. Everything's confidential. So reach out and we're happy to help. And Laura can get you, get you on your way, get you that roadmap.
Yeah. That's it, guys.
That's it. So I think later this month, we just have Laura's partner in crime, her friend.
Abby's going to talk about renovation loans.
Yes. So I think it's a great time, especially going into the winter months where we're going to see things sitting on the market. Some of the uglier things maybe. So don't miss that one. That'll be next week. So hopefully we can lock her in. That's our plan. So enjoy your rest of your week, your weekend.
Thanks, guys.
Everybody.
All right. Bye, ladies.
Bye.